You know that feeling when a stock just explodes out of nowhere and you're left wondering, how did I miss that? Well, today, we're going back to find the memo. We're putting Denison mines right under the microscope to figure out how it pulled off a jaw-dropping 119% gain. Was this just a random shot in the dark, or were there clues hidden in plain sight the whole time? Let's dig in.
So first, let's just appreciate the final score. By September of 2025, if you were holding Denison mines, that's ticker DNN, you were up a massive 119%. Now again, like that's a game changer for any portfolio. But the real story here, the really interesting part, isn't just that number. It's about the signals that were flashing months before this rocket ever took off.
And that brings us to the big question, right? Was this whole thing just pure luck? Somebody getting on the right side of a guess? Or was there a system? Were there actual data points, clues buried in the charts and in the trading data that pointed to this happening? That's what we're here to figure out.
To get our answers, we've got to jump in the time machine. We're going all the way back to February and March of 2025, long before that huge gain materialized. This is the moment when analysts started sniffing around, looking for something special. And what they found? Well, it set the stage for everything that came next. All right, our investigation kicks off with the most public piece of evidence there is, the stock chart itself. Now, for trained eye, this isn't just a bunch of random squiggly lines. It's practically a story being told. And back in early 2025, DNN's chart was starting to get very, very talkative. So just take a look at this chart. See those periods before the massive spike where the price is kind of just moving sideways? That doesn't mean nothing's happening. Analysts call this hidden accumulation. Think of it like big investors trying to quietly buy up a ton of shares without causing a panic and driving the price up on themselves. It's a classic footprint. And the clues, they get even more specific. First, the stock punched right through a major price ceiling, a resistance level it had struggled with for a long time. Then you see these momentum clusters. Basically, that's just a fancy way of saying there were huge pockets of buying activity at very specific prices. And then, here's the kicker. A technical pattern that should have made the stock go down failed. And in the world of charting, when a negative signal breaks, it often becomes an incredibly powerful positive one. The chart was basically a coiled spring ready to pop.
Okay, but a nice-looking chart is one thing. To really build the case, the next step was to see if the so-called smart money, we're talking the big institutions, was actually making these moves. And to do that, you have to look somewhere most people can't. You have to look inside the dark pools.
So, what in the world are dark pools? Honestly, the easiest way to think about them is like a private VIP stock market. They're totally legal, but they're not open to the public. It's where massive hedge funds and banks can trade millions of shares with each other without tipping their hand to the rest of the world. Because, if they tried to buy that much on the open market, the price would skyrocket instantly. So for analysts, this is the place you go to see what the giants are really doing behind the scenes.
And what the data showed was wow. Just look. Over 41% of all the trading in DNN was happening in these dark pools, way higher than average. But here's the real smoking gun, the VWAP premium. This means these big players were willing to pay, on average, over 2% more than the typical price. That's not a sign of caution. That's a sign of aggression. They wanted in, and they were willing to pay up to get their shares. The evidence was crystal clear. Big money was moving in, and they were in a rush.
Okay, so we know for a fact that big institutions were busy buying. But how did their activities stack up against everyday retail investors like you and me? Was this an institutional-led charge, or was everyone just jumping in at the same time?
And this chart leaves absolutely no doubt. In the 30 days leading up to this analysis, you had over $42 million pouring in from institutions. Compare that to less than $13 million from retail. I mean, it's not even close. This was more than 3 times the retail flow. This tells you one crucial thing. This wasn't some social media-fueled meme stock rally. This was a methodical, targeted accumulation led by the pros.
Now for the next critical piece of the puzzle. You can have a great chart and big money flowing in, but it all falls apart if the company itself is a wreck. So the next step was a crucial reality check. Was Denison Mines a fundamentally healthy company, or was this whole thing just a risky bet?
And the company's report card was looking pretty good. The debt-to-equity ratio is super low, meaning they weren't swamped with debt. A quick ratio over 3 is fantastic. It means they had plenty of cash on hand to pay their bills. And maybe the most important signal here, over 6.5% of the company was owned by insiders. The executives' own money was on the line. They had serious skin in the game. This wasn't just speculation, it was a solid business.
And then, when you zoom out from the company itself and look at the world, the picture got even better. You had this global rebirth of nuclear energy. Countries were trying to become energy independent, especially from Russia. The price of uranium was on a tear, and the whole clean energy movement was creating this massive tailwind for the entire sector. So Denison wasn't just a good company, it was a good company in the right place at the right time. So let's just recap. We have a bullish technical chart, we have confirmed aggressive buying from institutions in the dark pools, we have a financially sound company, and we have powerful global trends pushing the whole industry forward. Every single piece was pointing in the same direction. It was time to put it all together. See, this wasn't about stumbling onto one lucky fact. It was about a repeatable system. It's a process. You start with the charts to find the right moment. Then you go to the dark pools to confirm the smart money agrees with you. After that, you zoom out to make sure the big picture trends are in your favor. And finally, you do a background check on the company's finances. Each step confirms and strengthens the one before it.
And this quote from the original analysis just nails it. That incredible 119% move wasn't a fluke. It wasn't a lottery ticket. It was the result of a deliberate methodology, where every single piece of the puzzle, from the charts to the secret trading to the global headlines, all lined up to tell one single powerful story.
A case like this makes a really compelling argument for having a data-driven system, doesn't it? But it also leaves us with a much bigger question to chew on. Even though this system worked perfectly here, can any model, no matter how good, truly and consistently predict the beautiful chaos of the financial markets? It's a great reminder that while nothing is ever guaranteed, a solid process can absolutely stack the odds in your favor.